Come to Stock Pro Gist. Please do well to like and subscribe in order to stay up to date. Today we will be talking about NIO's lonely road to potential stock collapse. NIO, NYSE stock rallied last week, but it was short-lived. An indirect factor related to positive news with another big EV name fueled this brief uptick in price. Now that the speculative frenzy has faded, it's no surprise that shares retreated. However, even worse than the false hope perhaps generated by this dead cat bounce is the fact that the story with NIO has not changed one iota. Still stuck on a dead-end street, shares remain on the bleak path toward new multi-year lows. NIO stock. Behind the late June rally, as you might have guessed, it was news of Volkswagen's OTCMKTS BWGY plans to invest up to $5 billion into U.S.-based EV startup Rivian Automotive, NASDAQ RIVN, that led to the aforementioned late June rally for NIO shares. On the heels of this news, investors dived into other small, struggling EV stocks, and NIO stock was no exception. However, much like we recently argued about another EV also ran, briefly boosted by this news, Lucid Group, NASDAQ LCID, it's difficult to see a similar deal taking shape for NIO. Admittedly, NIO does have some unique proprietary technology. This may be appealing to an incumbent automaker looking to make the vehicle electrification transition. Namely, NIO's battery swap technology. This technology, which enables vehicle owners to quickly swap batteries at local stations rather than charging them back up at home, has yet to give NIO much of a competitive edge in its home market of China. However, we could see how larger competitors may want to get their hands on this technology. There are factors pointing to auto manufacturers deciding not to form a partnership with NIO. Steer clear, as lower prices likely lie ahead. The issues that knocked NIO down below $5 per share will keep on sinking it to new multi-year lows. Unless, of course, NIO ends up having a sleeper hit on its hands with one of its recent or upcoming new vehicle launches. However, err on the side of caution. Assume the growth slump persists. If this happens, so too will the company's cash burn problem. Sure, NIO could raise more capital to cover these losses. Even so, this will most likely lead to a further watering down of NIO's stock price. As before, time is running out for exiting a position while you still can. Pretty soon, whether with quarterly results or with the latest vehicle delivery numbers, what's left of investor confidence in NIO stock could plunge once again, leading to another big decline for shares. That is all we have for you today. Thank you.